Welcome back to another trade recap video, ladies and gentlemen. Let's get right into it. So last week we took 4 trades in the Signal group on my personal accounts. 4 trades. So let's review them. The first trade was USD CHF. This is how it played out. It was a 1 to 2.5. The next trade was USD CAD. It ended up playing out for a 1 to 6. After that, we took NZD CHF. Ended up hitting a 1 to 3.67. And then the last trade of the week was USD CAD once again. I was trying to take a continuation to the downside, and that didn't end up happening, right? So why did I take these trades? Well, let's answer those questions. Last week, this market was and is still bearish on the weekly time frame, right? So we had a lower low, lower high, and we are trying to create a lower low on the weekly time frame. On the daily time frame, price was also bearish, right? So we created a lower low, we broke past this low right here, therefore this became our most recent elbow to push all the way down to this point right here. Now, since then, the market has created a lower low when we closed below this point, so therefore our daily structure point is now right here. But at the time, it was up here, right? So and then moving on to the 4-hour time frame, we had shifted bullish. So we had a lower low, then we had to shift the structure. We went bullish above this point right here, and then we closed bearish once again. We broke this structure point. We created a lower low, then I waited for the lower high, and on the way to the next lower low, this is where I entered this trade, right? So let's grade this together. So we have 3 time frames in sync at the time that I took this trade. We were around psychological level. I would count 1.78 or 798 as around psychological level. I understand that it is a few hours past where we retested the round psychological level, but it has still been retested, so I count that as a confluence as well. Another thing that I was looking at is the lower time frame. So on the lower time frames, we basically had, okay, I'm gonna backtrack a little bit. Going to the weekly time frame. Now, my confluence tool right now is experiencing a bug, so Freddie's working on that. My percentages are a little bit different from what they should be. These should all be 5%, and I'm working that out. But so on the weekly time frame, what do we have? Do we have an area of interest? No, we don't really have an area of interest on the weekly time frame. Do we have a pattern? Not really. Do we have a candlestick rejection? I would count, well, actually there's not really a candlestick rejection either, because that would be somewhere up here. We are retesting or rejecting previous structure, so price did come up to previous structure, retest it, and therefore we're continuing to sell. You could use that as a confluence. I probably wouldn't. And on the weekly time frame, we are not retesting the EMA. However, on the daily time frame, things are a little bit different. There's a lot more price action here. There is a daily area of interest, so we are at a daily area of interest. Do we have a pattern? We could count this as a really ugly head and shoulders, or you could count this as a double top right here. If we zoomed in a little bit, there would be a double top. On the daily, it looks slightly cleaner, but this is probably not an elbow for a lot of you people. However, if you did count this as a double top, then you would have the neckline right here, retest of the neckline, and price continued to sell, right? Anyways, I would count this as a pattern formation. I would count this as a candlestick rejection because we engulfed the previous day, we retested and rejected. And then, of course, there's the EMA, but we are a little bit too far away from the EMA to count that as a confluence. So we are rejecting previous structure, we have candlestick rejections, pattern formations, and we have an area of interest. So on the daily time frame, there are lots of confluences that make this trade look really nice. Then we move on to the 4-hour time frame. So on the 4-hour time frame, we have a head and shoulders pattern. We break underneath the neckline just slightly. I would count This whole area really would be the neckline, so we technically didn't fully break the neckline, um, but I was expecting price to continue to the downside. So we have an area of interest, so price retested the daily area of interest on the 4-hour time frame. We have a pattern formation, we have a head and shoulders, we have a candlestick rejection. Here's our engulfing, another engulfing right afterwards, and we have previous structure. So we have this little elbow here as previous structure, or you could count this one as previous structure as well. And we have the EMA, which we are really close to. You could count this as a rejection of EMA, or you could not. That is totally up to you. I would personally. And then on the lower time frames, I don't think that we had too much going on. So we had price going bearish. We had a lower low, shift the structure, higher high, higher high, higher high, shift the structure, head and shoulders was created. We retested the neckline of the head and shoulders, and price sold. So I basically entered prematurely. I should have entered a little bit closer to session. But either way, my stop loss was placed in a good area, 15 pips away from where we entered, and the rest is history. Now, why didn't I hold longer? I didn't hold longer because I was looking at where we were in price. We were in an area of previous rejection, so we have an area of interest right here, right? We have a daily area of interest, 1, 2, 3 structure points. I was afraid that price would reject this daily area of interest and continue to the upside. That is my fault. I know that I should have continued to hold. After we got this nice continuation, there was no dojis, no rejection candlesticks on any of those higher time frames. So therefore, I could have continued to hold, which is what I did on USD CAD. USD CAD, fantastic trade. Let's go over it. Sorry. Our confluences on the weekly time frame are bearish, so we have a lower low right here. On the daily time frame, we have a head and shoulders formation, and price is also bearish. We're bearish because we broke underneath this structure point right here. You can see how we had a shifted structure, higher high, pull back, higher high, pull back, higher high, pull back, higher high, higher high, shift the structure, pull back, lower low, okay? Do I expect a continuation to happen? I do. I expect this next week for us to get a continuation to the downside. Now, that's besides the point. Daily time frame, we were bearish at the time, and 4-hour time frame, we were also bearish. It looks really similar to our entry on USD CAD. If you look at the 4-hour time frame on USD CAD, it's the same structure. You have a shift the structure on the 4-hour, lower low, pull back, sell. Same thing here. Higher high, lower low, pull back, sell. Head and shoulders pattern, we kind of retested the neckline a little bit better. Here you can see how we actually broke below this neckline, so we can count this as the area of interest, the neckline. So you see we closed below, we pulled back into that area of interest, into that neckline, and then we sold. Anyways, back to our confluences. Weekly time frame. Are we at around psychological level? Well, at the time of entry, we were close to 1.39, but let's see, 1.385. Yeah, so we were close to 1.385. Did we retest it perfectly? No, we didn't. However, it is still around that level, and you can see how many times price entered that area for those sells. Next is our weekly time frame. Do we have an area of interest? On a weekly time frame, I think we do. If you look at this, we have a huge weekly area of interest right here. So we are in a weekly area of interest. We are reacting from the weekly area of interest. We have kind of a double top forming right here. I would count this as one structure. This is two structures. However, during the trade, that was not the case. So there's no pattern formation. We have a candlestick rejection on the weekly time frame. We're rejecting previous structure. This right here is the previous structure, and we're retesting the 50 EMA. All of those confluences are met on the weekly time frame. Next, we go on to the daily time frame. Daily time frame, what do we have? We have, I could almost count this as a double top. I can see how this is a pullback, kind of a structure point. but I'm probably not going to use this. Do we have an area of interest? Yes, we do. Do we have a pattern formation? Not really. Do we have a candlestick rejection? Yes. Engulfing, pullback, continuation? We do. Do we have previous structure? Not exactly. And do we have the EMA? No, we do not. Okay. Now this week, things are a little bit different. We have the EMA in confluence. We have previous structure. We have a few extra confluences, in fact, to take this trade to the downside. And we'll see how this plays out moving forward. Next is the 4-hour time frame. 4-hour time frame had the shift the structure, pullback, lower low, and we had the area of interest, we had the pattern formation, we had the candlestick rejections. Candlestick rejections is a little bit iffy. I wouldn't really count any of these as candlestick rejections, or at least any of the previous ones as candlestick rejections. Are we rejecting previous structure? Yes, we are. We're retesting previous structure, and we have the EMA in confluence. We broke below the EMA, we retested the EMA, and we sold, okay? And then we have our entry confluences, but you can see how this is already a great trade. Next up is the NZD CHF trade. NZD CHF, we have a weekly area of interest. Not really, it's more of a daily area of interest, right? We have tons of structures here, pull back into the structures and sold. So what do we have? We have a daily area of interest. Weekly time frame is bearish. Daily time frame is bearish from here to here. And 4-hour time frame is also bearish. We have the shift of structure, head and shoulders, retest of the neckline, and sell, right? So let's go ahead and mark up our weekly time frame confluences. Are we at around psychological level? We are at 0.475. Yes, we are at around psychological level. Do we have an area of interest? Yes, we have a daily area of interest. It's not exactly a weekly area of interest. Do we have a pattern? Not really. Do we have a candlestick rejection? Not exactly. Are we rejecting previous structure? Yes, we are. We're at the previous structure. Are we retesting the EMA? No, we are not. Okay, so that is the weekly confluences. Next is the daily confluences. Daily time frame is bearish. We have a daily area of interest. We have pattern formation. I could almost count this as a head and shoulders. It is very, very ugly, but that is shoulder, head, shoulder, sold, retest the neckline, continuation to the downside, okay? I've seen cleaner ones. You can call it whatever you want, but we do have a pattern. Do we have a rejection candlestick? Yes, we do, right here. Rejected, continuation to the downside. Are we rejecting previous structure? These are previous structures, so yes. And do we have the 50 EMA in confluence? Yes, we do. The 50 EMA is right there. I would count this as retesting the 50 EMA. Next is the 4-hour time frame. 4-hour time frame, we have a pattern formation. We have an area of interest. Do we have candlestick rejection? Yes, we do right here. Engulfing candlestick to the downside. And then we have previous structure. This is previous structure, price sold. Quick retest of these wicks and then continue to sell. And we have the EMA in confluence as well. We broke below the EMA, we retested the EMA, and we sold, okay? Really, really nice right there. And then obviously you have your entry confluences, which for me weren't really the best. Price was already bearish on the 30-minute time frame, so nothing changed, but we did enter after this engulfing 30-minute candle, and I set my stop loss way, way, way up here. So we gave room for the trade to breathe. So we had an engulfing candlestick. Obviously, if this bug wasn't in my system, then this would be closer to 95%, maybe 100% trade. But yeah, that's basically it for the trade recap. Obviously, we have this one loss. We can go over it really quickly, but basically, I saw that we were at this daily area of interest, and I saw that price had created a doji candle right here. So after the doji was created, I entered for sells because I believed that we could get a quick continuation to the downside. Obviously that didn't happen. I do still believe that we might get a pullback right here and then sell and then pull back and then sell. So that's kind of what I was expecting. I was expecting this entry, but we're probably going to get it a little bit later. And we'll see. We'll see as time moves on this week. Thank you for watching this video. I hope you learned something. If you're interested in the tool that I'm using, it's right here. It is the TradingView Confluence tool. It is on our website. Everything that you might need in terms of confluences. You can even create your own. Here, you can add a confluence set and do whatever you want. Like I said, there's a bug in my system. Freddie's going to work on that tomorrow. But until then, visit the website, see if you like it. We also offer the signals. If you want to see what trades I take, when I take them, enter the same ones. This is where you can do that. And then we have our community where you can see the things that we offer in terms of mentorships and live market analysis. If you like the free Sunday calls, you can have one every single day. All you got to do is subscribe. And yeah, I promise that's probably the most cost-effective, bang for your buck deal that we have on the website. But you guys make your own decisions. I hope you have a great rest of your week. Thank you for watching, and I'll see you guys in the next one.